Ethereum is getting absolutely crushed right now. Just a few weeks ago, traders were talking about recovery targets and ETF adoption. Now analysts are openly discussing the possibility of Ethereum falling all the way to $1,000. And honestly, the scary part isn't the price drop itself, it's what's causing it. Ethereum recently fell toward the $1,500 level, marking one of its worst sell-offs of the year. At one point, ETH briefly traded near $1,500 before finding some buyers and bouncing slightly. But zoom out for a second. Ethereum is now down roughly 23% in just 1 week. That's a brutal move for the second largest cryptocurrency in the world. So what happened? Well, this wasn't just one thing, it was a perfect storm. Bitcoin briefly lost the $60,000 level. Long traders got wiped out, institutions kept pulling money from Ethereum ETFs, and macroeconomic conditions turned ugly at the same time. Let's start with the liquidations. According to recent data, nearly 79% of liquidations came from long positions. That's important because it tells us most traders were betting on prices going higher. Instead, the market moved the other way, and when too many traders are leaning in the same direction, liquidations can create a domino effect. One forced seller triggers another, and another, and another. That's exactly what happened here. Then there's the ETF problem. This is the part that caught my attention. Back when Ethereum ETFs launched, many investors expected them to become a major source of demand. Instead, money has been flowing out. Ethereum ETFs saw roughly $540 million leave during May alone. Then another $168 million exited during the first week of June. That's real selling pressure. And unlike social media narratives, ETF flows are measurable. When money leaves those products, the underlying Ethereum often gets sold. Now add in the broader macro picture. The latest US economic data came in stronger than expected, which reduced expectations for interest rate cuts. At the same time, tensions involving the United States and Iran pushed oil prices higher. Higher oil prices can reignite inflation concerns. And when inflation becomes a concern, investors tend to move away from risk assets. That's not great news for crypto. In fact, prediction markets are now pricing in over an 80% chance that the Federal Reserve doesn't cut rates at all this year. If that happens, liquidity stays tight. And crypto generally performs better when liquidity is expanding, not shrinking. Now let's talk about the chart itself, because this is where things get serious. Several analysts believe Ethereum is sitting on critical support. Around $1,400 is viewed as a major line in the sand. If that area breaks, some analysts are targeting the $1,000 to $1,100 region as the next major support zone. That's a long way down, and that's why so many traders are paying close attention right now. The market isn't pricing in a collapse, but it is pricing in risk, and until ETF flows improve, macro conditions stabilize, and buyers regain confidence, Ethereum remains under pressure. Now personally, I think moments like this are where investors start separating short-term fear from long-term conviction. Because while many people are focused on the daily price action, others are looking at the next phase of crypto infrastructure being built underneath the surface. One project that's been getting attention recently is Bitcoin Hyper. Not financial advice, obviously, but Bitcoin Hyper is currently priced around $0.0136812 and focuses on expanding Bitcoin's utility through faster and more scalable infrastructure. The project has already raised over $32 million, and with another pre-sale price increase approaching soon, it's continued showing up on a lot of investor watch lists. If you want to learn more, there's a link in the description below. And while you're checking that out, you'll also find a link to the Best Wallet app. A lot of investors use it to manage assets across multiple chains, track pre-sales, and keep everything organized in one place. Now bringing it all together, Ethereum isn't crashing because of one headline. It's the result of liquidations, ETF outflows, macro pressure, and weak sentiment all hitting at once. The next few weeks are going to be incredibly important, because if support levels hold, this could eventually become a major buying opportunity. But if they don't, the analysts calling for $1,000 Ethereum may start getting a lot more attention.